Hey, everybody, welcome. It is July 27th. Scott Riley, the market update desk with Mortgage One, NMLS number 157524. Hope everybody had a great weekend. The Tigers kind of blew the last two games. Thanks again, AJ Hinch, for an undefensible lineup and Scott Harris for an undefensible set of middle and end relievers for the Tigers. Man, what a disappointment going on with them. And will they trade Scooble? Will they keep him? Lots going on there. Getting into the market, we had kind of just touch base on what happened the end of last week. So we had more conflict or expansion of conflict, I should say, within the Middle East. We had Iran continue to try to shut down the Strait of Hormuz. They hit a couple ships. Then they had one of their proxies, the Houthis in Yemen, fire on Saudi Arabia, which then Saudi Arabia fired back on them. And then the Houthis also attacked a Saudi Arabian tanker in the Red Sea. That put substantial upward pressure on oil, rose above 100 a barrel. Then we also parallel saw a continued rise in the 10-year treasury yield. In fact, we topped out at the high point for the year, 4.72% on Friday. The good news is over the weekend, we did see some receding on all those things. Today, we are seeing the 10-year treasury down, we're seeing oil down, and we're seeing some of the conflict maybe again go into another pause phase. Yet to be seen how that will continue to go. But again, the geopolitical over the weekend pushed things around, and it's just hard to see those things coming. It's going to continue to be volatile. And that's just the how it's going to continue to go probably for a while. On the data front today, we got durable goods orders. Now, overall, headline durable goods orders were up 0.3% in June, but the market expected 2.5% to the plus side. Now, the key one that the Fed at least looks at is core durable goods orders. That strips out some volatile things like defense spending and aircraft spending. That showed it was up 9 tenths versus the market expectations of 8 tenths. So slight beat there. In addition, May was revised up 1 tenth. One important thing also within the report showed that core shipments, that's a data point that gets plugged directly into GDP to try to forecast growth. That came in at plus 1.9%, more than expected. So, most of that was a very good set of data points. Now, this week, we're going to get a lot of stuff. This is a very important week. We start off with home appreciation is going to come out from Case Shiller and FHFA. Then that's going to go into Tuesday. Starts the 2-day Fed meeting. So that'll start tomorrow. Then Wednesday, we'll get not only the Fed decision, which everybody's at least presuming, at least for now, it'll be a pause. There will be probably some healthy discussion within there with the Hawks potentially voting for a raise. We'll get the commentary from Fed Chair Warsh on Wednesday. Now, on Thursday, we get a very important inflation reading, PCE, personal consumption expenditure. It's one of the Fed's favorite measure of inflation. We're also going to get first look at Q2 GDP along with jobless claims. Now, we did see jobless claims somewhat unexpectedly go down last week, but when you really understand it, that should have been expected because there were significant increases to verification processes due to trying to stop some, if any, of the fraud that's within the unemployment system. This dates back to trying to get something more substantial in that since COVID for fraud indicators and stopping it. Friday finishes out with the employment cost index. So lots of stuff going on this week. On top of that, yes, we get all the geopolitical. Supposedly there might be a 10-day ceasefire. Whether that holds or is real, a lot to be heard and understood about that aspect. Now we're seeing the markets, as I mentioned earlier, to the positive. 10-year treasuries yield is down 3 basis points to 4.644. Now remember, we topped that at 4.72, so we're down 6 basis points from the top end. Mortgage-backed securities have a little bit of juice today. They're up 10 basis points. Dow's up 120. Oil is down $6 a barrel, and WT light crude is down $7.60 a barrel. So those are all positive things. Where we go, yeah, that's going to be the big question. We'll keep on top of all the information and data coming out, let you know what's going on so that you can make educated decisions and stay knowledgeable what's happening in the market. We had another buyer this weekend we helped get pre-approved, got an offer in, and we are helping people understand that while rates are somewhat elevated from where they were 4 weeks ago, it presents an opportunity to have less competition. Less competition means you might get an offer accepted. Keep in mind, we're still in a very tight inventory market. So any less competition is a very important thing. So higher interest rates actually means it's a great time to buy. Less inventory, less competition may help you get an offer accepted or maybe at a little bit better price. We'll keep you up to date. 616 293 2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.